What's going on, guys, and welcome on into the stream. Hope everyone is doing well today on this. What is today? Today is Wednesday the 19th. Okay, so that said, we have some chop to deal with yet again. Here we go. We're looking at, let's pull up the markets. Let's pull up the S&P right here. What do we got? Homepage on FinViz. We got some chop to deal with again here, guys. We opened up, okay, pulled back, went red. Pop back up, went green, and now we're back red here again. So it's literally just seems like it's a chop fest. Same thing we've been kind of dealing with, right? As the past couple of weeks, really. That said, we got to look at the S&P and take a look at SPY. How SPY is setting up. SPY just broke low of the day, so SPY looks like it's heading down for some more downside right here. 454. To think that I had 462 puts last Friday, and I sold those yesterday, man. Whew, can't complain about the green, but that is a little unfortunate. We sold those too early, right? Okay, that said though, across the board today, we did see. I kind of noticed it. I was looking at playing a potential bounce play because last night, if you guys watched, excuse me, futures, they were actually down pretty nasty. It looked like it was going to be down pretty nasty overnight, like I don't know, like 10 p.m. or something like that. When I went to bed, I just checked. I'm like, oh man, it doesn't look like we're having a nasty day tomorrow. And then I woke up and I'm like, well, why everything looks green? So we bounced back, but it's been just like that chop city the entire way. So the Dow, everything's kind of in line. NASDAQ down about 0.4, S&P down about 0.45, Dow Jones down about 0.5. So it's, they're all kind of roughly in line, nothing like crazy out of line. I could kind of tell though something was up just from basically my feeling, just kind of feeling around. By like Robinhood, I was like, look, I've been looking for a bounce back. I'm like, hey, when we get that snapback, we're gonna have a nice snapback on some of these names, and Robinhood is one of those names that I'm thinking that we're gonna see a nice snapback when we do get that bounce back on some of the tech names. Because if you look at Robinhood's chart, right, it's down so much. I'm not swinging it. I know some people are holding, shares and whatever. I just played options. I was looking to play options, and so I bought some at the open, and I was gonna risk it down to like the pre-market or the lows from yesterday, down towards about 14.25. Which we pretty much dipped down to, but kind of held up. So I held there. It was down a little bit. Then I sold for like just making like a few cents on the contract. And then I ended up taking the rest off once we fell back below VWAP. But I could tell, it's like, well, the market's green, right? NASDAQ was like super green at the time. SPY was decently green. And I'm like, well, Robinhood was red. I'm like, no, nothing, of course it can, doesn't have to be green. But I was like, I was kind of expecting a bounce back. And generally speaking, when we've had green days on tech, Robinhood's been a strong player, at least for a pretty nice bounce. And so some of these days, look at this. I'll go back to the 11th. Quick dip at the open, and the thing bounced back up from around 15.30 to 16.85. So a really big swing, like a $1.50 swing, right? And I was expecting maybe something like that. And we didn't get that, so it's like, something's up. And then ever since then, the market pulled back, went red, and all that stuff. So kind of could see it happening live, right, and feeling it by being in something like that and getting a feel for it. So we'll see what happens. So that's that. Let's take a look. Go back to SPY and take a look how it's setting up. If we go back to the past couple of weeks on SPY, here's the 4-hour chart. So pre-market hours were down low towards like 453-ish, but we have some lows back here. The low that we saw back in December, 451 or so, and then back in here, early December, these lows were down towards 450, and we actually dipped just below 450. So it seems like that's kind of where we're headed. Down into some of these lows, 451 and then 450 to 448, kind of the levels to watch on the S&P. It seems like, it's pretty interesting how we can kind of see these big drawdowns. Like, look at this, if we look back to the chart, right? Look at this thing. Down, well, it's not down that much, but like these sharp declines, it's just literally, it's been chop city since, looks like, I would say, you go back to November, like 15th, really. And that's actually, very, very noticeable in a lot of small caps and a lot of growth stocks. You go back to November 15th, and that is the date. That is literally the date that a lot of the tax loss harvesting went on. And we saw, you could look at a lot of charts and see that exact kind of setup, that exact line. Literally, that's the day things changed and stuff started selling off substantially. So VIAC is another one of those. Go back to November 15th. Where is that? Puts you right in here. So a little bit of premature selling there into early November. And the 15th hits, boom. Plummets, right, from up in the mid 30s down to the upper 20s, and now it's back in the mid 30s. So it's kind of just done its little V shape right there, and it's kind of getting back up to where it was trading It's been an interesting stock to watch because everyone, I think, thought this one was going to rebound really, really nice. And it just sat flat for months, and then it fell off, and now it's trying to get back up. And we got some resistance to watch here. Prior support, now resistance up here around 37.50 or so on VIAC, ICOM. Some interesting stuff to watch, though, for today. VVOS finally cracked down below. It kind of, I don't like those types of looks, to be honest. If it doesn't make a big move, it kind of had a nice pop and pre, and then held VWAP, but then eventually it's going to crack VWAP, and that crack happened, and now it's trying to, maybe it's trying to come back, but we'll see if it does. But it's been a decent volume player. It's up, about 100 million shares almost have been traded on VVOS off of some news. So it's one that we kind of got some news, and it kind of held up for most of the day. It's a good sign for some small caps. Pixie, PI, this is an interesting one. It's actually holding up quite well. Pixie, again, same setup though that we've kind of been noticing for a lot of these things. It hasn't, it's again, this is why I kind of can't get myself to dump small caps. Number one, small caps that I like at the bottoms. Pixie was one I believe we talked about on a live stream at some point. It's one that I've always kind of seen. I've traded it multiple times, probably, back in 2019, 2020, whatever. This thing sold off, right? November 15th, the whole month of that just sell off, right? Then it had a little pop right here. It started to get some attention, get some traction. It popped at the end of the month of January or of December. Goes from the 200 SMA, right? It goes from down around 70 cents to this 200 SMA up around 175, up over 100%, which is awesome, right? Then it came back down, put in a higher low. It didn't it dropped just below the 50 SMA, but it kind of held up. And then boom, now we're getting that next extension and that next squeeze out, that secondary squeeze out. This is the same setup that you've been watching. So on a lot of these stocks, let's look at VVOS. Watch VVOS, because this one was just kind of trending down for so long. Here's your first day out, right? Here's your first day out of that downtrend. Here's your first pop, right? Now watch this thing over the coming days. Not saying that it's a buy right now, but I'm saying watch over the coming days. If it holds up, let's say it holds over $2, or let's say it holds like a 185 support. I don't know, something like that. Maybe it fills the gap back down to about 185, and then it holds that level, and then it starts to curl back up. That's the time to get in. And we're literally seeing the exact same thing happen on LODE, LODE. We talked about this stock, I think, last week multiple times on the streams. It had a pop day, right? It's also, gold and silver, I believe. The precious metals are having a solid day today. But look at this, right? It had this pop, goes from 125 to 185. Then it comes back down and holds up, doesn't make a new low, okay? And then it starts to trend. And now we're sitting here at 159, hit up to over 160 today. We're at the 50 SMA resistance, so we're going to see this area as resistance. But if it can get up over 165, LODE makes I think a very nice run up towards 185, which is the prior high, and then $2 I think is not out of the question, especially if gold and silver keep pushing. So we'll have to watch that too. But I mean, again, same thing right here. Had a nice pop, right? Popped up 40% and then pulls back, and it gives you your secondary add or your time to reload. So if you are in a small cap that you like, that you don't think makes any sense to be down this low, that's something to watch for. Obviously, sell the spike, right? Sell into that first spike so that you can lock something in. But then if it comes back down and holds trend and holds a higher low, or higher low, that's where you can maybe even add those shares back that you just sold. So that's at least my plan for what I see and what I'm in. So we'll see what happens. Last time NASDAQ gave up 200 MA was during the Rona. Yeah, we're back down to that point. Here's the NASDAQ. And we just dropped under the 200 SMA on the NASDAQ. So that's pretty, it's something we haven't seen right in a long time. I think a lot of charts. Let's say look at the S&P. Where's the S&P? S&P is still way above that 200 SMA. The 200 SMA on the S&P is 440, 442-ish. Which, we could get. It's not that far off. We can get it, but I don't know if we'll see that. The Dow was very close. The Dow was about, looks like, $3 off from the 200 SMA. We actually hit that on the 30th or so of November or the 1st of December. We hit that on the NASDAQ, on the Dow. But the NASDAQ has now dropped below. So next areas to watch for the NASDAQ, right, were some of these lows that we saw back in October. So we're down below December's lows. We're down below, and even November. Well, yeah, we didn't drop below that in November. We're down below December's lows. So the next area, this is actually a really crucial spot. I'll draw a line right here. Why? Because it lines up with the lows that we saw in October, early October, but they also line up with the exact highs that we saw back in February and then back in April. Look at that. So you're getting back to a point like you may be trading at levels we haven't seen, or back to levels that we saw back in February of last year. We're about, let's see, that's how much of a percentage are we off from that? We're like literally from where we are right now, we're about, 2% or less off from hitting those levels, those highs from that point, which is pretty wild. Pixie top of Fintel squeeze list, I think that's why I got some pressure. Yeah, I mean, that's the thing. Exactly, because these things, right, they pop and then shorts pile in because, okay, small caps have been in a horrible, downtrend. It's an obvious short. Let's just get back in these things short. And when that happens, right, you get that sentiment shift to everyone's going short, or a lot of people are favoring the short side. And then that's where the thing kind of holds up, doesn't die, and it squeezes back out. So I'm not surprised, kind of what you're noticing. So that's what SBEV, same thing. SBEV, it's the same pattern we've been noticing. Now, not every stock that makes any run is going to go. Definitely not, right? But a lot of these have been. This is going to be a very, very interesting pattern. SBEV had a little pop day, held trend, had a second pop, pulled back, and then had another one today, right? So it's doing the same exact thing. Neuro is one that I was in yesterday, and then I got out in the after hours. So it dropped below the level that I wanted to see hold. But this is another one that I was kind of looking to see if it did the same thing. But it could be. It could very well be setting up. Look at Neuro. Look at Neuro. Had a move from 485 to 741. Okay, cool, whatever. But now it pulled back, and it seems like it's trying to put in a higher low. It looks like it filled the gap. Let's see if we can get that zoomed in a touch more. Looks like it filled the gap. Not really. The gap down to about $5, so it didn't get there all the way, but it got close, down to 523. Comes back, and it found the areas that we saw in the days leading up to the spike. That were the resistance points, I guess, if you could say. Found that to be, I'll just draw a little box so it's easier to see. Found that to be now our support. And if Neuro holds up here, it's the one that's on my watch list, right? If it holds up here, the risk reward could be decent for a squeeze out. Let's see. Yeah, I mean, I kind of like it. It's building higher lows as we speak right now. I might just take a position on this thing because I'll risk it down to the lows of today, and that's it. I'll play the exact. Let's see if that strategy works out here. So if I take it right now, 546, our lows of today are 523. So you're going to risk yourself 20 cents, but I think we can get a move to 6 plus, which would be about a 50 cent. So I like that risk reward right there. I'm going to snag. Let's just snag a market 100. Let's do 100 for now, 150 for now. And we'll take that and we'll see how it goes right there on Neuro. So we're in there at 548, risking down to the lows of today on Neuro. We'll see how that plays out. It's also down 13%, so that could be now, could be a triggered short sell restriction. It's building higher lows. I kind of like the setup there, and if it gets over VWAP, boom. It might not be today, it could be a tomorrow thing, but I'll play that accordingly. Let me just really quick look over here and just see if they got S3s on file, what they got. Yeah, they do have an S3 on file, it looks like. On the 22nd of October. Have they used that is the question. So let me see if I can pull up on the side if they've done an offering anytime recently. If they haven't, then that's a risk, obviously, to the downside, which is why I wouldn't play that with crazy size at all. Or even holding overnight is a risk there too. So maybe we can just get out if it doesn't make the move today, that squeeze out today. We'll just get out and we'll wait for a re-entry tomorrow. Let's see. Looking up offerings. They announced a registered direct. No, it's not. It's not Neuro. Sorry. I'll put up here so it's easier to see. Neuro. They have an S3 that they filed on the 22nd of, I believe, October. So they haven't done an offering in a while, it looks like. So they could definitely do one, it seems like. I wouldn't be surprised if they do. So we'll have to watch out for that on Neuro. They might not. There's never guarantees, but we'll have to watch that. So I'll hold that one for now, and we'll obviously keep it with a tight risk down to the 523. Honestly, you can play it to this low right here. I want to see it up over 5. I want to see it hold 537, which is the building higher lows. So you can play that too. I could even put I can put a stop loss at like 533 if I wanted to. If I really wanted to keep a tight risk, if I was in like heavier than I wanted to be, but I'm not in heavy, so I'll leave that for now. Yeah, that was a nice SBEV. Was a really nice overnight swing as it got going in the after hours. I'm surprised it held up like that. It held up all, in the after hours, popped at 4 a.m. and then had a really nice push here. It looks like 7 a.m., 7:30 a.m. That was nice. So Lucid, let's see, I think the lockup officially ends tonight. So everyone was kind of all like, freaking out about the lockup and stuff. The lockup, technically the date is today, but it's like at midnight tonight. So technically I guess the founders are able to sell their shares tomorrow. So I'm holding a put for that. What I did was I'd actually played it like 2 more times. So I have this line right here that I've been watching for a while. It's been a key level for me. And if Lucid can't get above it, it's going down in my technical analysis opinion, right? Until it's not, right? Up around 41.75 to 42.50 or so is kind of level. But it got up there once. I added a put, and then I ended up selling that put for, whatever it was. I don't know, 10 or 25% probably gains on the pullback down into there, down at VWAP. Did it again. I missed that ad. So I was, wasn't paying attention and didn't see it. Then I actually added another put there up, and then I ended up selling that at VWAP as well. So I was holding one yesterday just so I was there. And then I added one, and then I sold it. So I made a few bucks essentially scalping off of that, but I'm still holding one. Technically, I think my average on that is like 124. It's at 130 right now, so it's whatever. I don't really like. I kind of like the 40 zone, not the 39s. I would want to get rid of this tomorrow, so I'm holding it one more night in case of a market pullback or market gap down, or just Lucid gaps down tomorrow, which is possible. If not, it is what it is. I lose like $100. It's fine. BBIG got destroyed today. Look at this thing. It was down more. And we were talking about this thing, and I've talked about this one in the past, and everyone was kind of jumping on. And I was nothing against it. I wasn't going to short it, and I was going to let it do its thing. But it pretty much got rejected at these levels perfectly, or had these levels worked out really, really nice. So initial run 375, that was resistance, and then the next day it took us to break over, and then we held over. So prior resistance became support. Boom, on the 14th. Then we made a move up in after hours and pre-market hours on the 18th. Boom, we got kind of stalled out and then consolidated around that 450. Next level we had on our chart. Okay, boom, market opens. Where does it go? From 450, boom, right to 550, right at our next resistance. Then it pulls back and it trends up. Then in the after hours yesterday, what did it do? Went from broke 550, broke those highs, and went to 5.99, 1 cent off from my $6 resistance. Or it's not always a perfect exact to the cent level, but a $6 resistance was that was my level, and it hit 5.99, and then it fell off from there. So it worked out perfectly right there on BBIG. And I was thinking maybe, that $6 was a gap fill there, but that happened in the overnight or the pre-market hours, so it didn't end up working out. But now it's falling back off, and it filled the gap back to the downside. So maybe it wants to hold up here. I don't really care. Honestly, it's just like at this point in the game, it's just literally the way I see it is like you're just guessing. It's like, I don't know, maybe this thing holds up. It's just not worth it either way. I think the shorts had a really good day today, so anyone who was shorting this thing probably had a mercy exit today, or at least they were able to take something out. So let's say you're shorting this thing at like 375, you added up at 450, and then you added heavier up in the fives. Well, you're probably got down to your average, and you probably were able to kind of lighten your load, lighten your short today, and then you can kind of reshort, or now you have more powder essentially to short it on the next pop. So I think we'll see. But if the pops from here, struggle, then that's telling you who's in control. But sellers are in control, at least, from just looking at it that way. There's a PR this morning on SBEV. That's what definitely helped, right, on SBEV. Because we had this pop. Let's see the 5-minute chart. Yeah, it was pretty clear, right? Because you can see the thing was kind of just going sideways. This looks like it wasn't like it was building, and then went. It just you can tell it was a PR pop from the 315 area right up into the 450, 60 area fast, and within 15 minutes. Oh, you know what? Sometimes luck finds a chart, right? Sometimes you get a little news that finds a good chart. SoFi, for example, was a perfect example of that. Look at SoFi up 16% today. Well, we were talking about SoFi yesterday. I'm like, we got a support here at $12, and look at that, right? $12 lined up with the prior area back in here. We were kind of watching. So I'm okay. If $12 can hold, that could be good. And what happens? They got some positive news, and next thing you know, they got a price target upgrade. They got some news that they're officially now going to be a bank. They got some approval there. So now SoFi goes from 12 to 14.50 like that. So, kind of got lucky in a sense in terms of this didn't look good. It could have easily just fallen off and gone down into the, sub 12 down to the 10 area, maybe even lower, who knows. But that news, we got a little price target upgrade. It comes at a good time sometimes, it's how you think support resistance, and you think that stuff is like, okay, some people don't like it, some people love it, people hate it, whatever. But also at the same time, I think a lot of people know whether that's issuing a price target upgrade at a certain time, issuing a press release at a certain time. There's certain setups, short percentages, all that certain stuff. That's all taken into account. I think people don't realize that stuff is definitely part of the game. What's this, a flash crash? Time to buy? No, I mean, not really. I mean, we're just kind of slowly kind of grinding down. I mean, if you look at the S&P, here's the past couple of weeks, really, we kind of hit up those all-time highs up in the 480-ish area, and we had some bigger moves down along the way, but then we kind of bounced back up, pulled back, bounced back up, pulled back, and then this morning essentially too, right? We bounced back up in pre-market, and the first few minutes of the market open, we were green. Even about 2 hours ago, we were green on the S&P, and now it's fallen back off. So you kind of just see it's like stair-stepping its way on down. We'll see what happens. I'm curious, how this plays out. Also, I was just looking too. I'm not sure if you guys are familiar. I'll see if I can pull him up. Let's see. David Hunter. I was just looking through some of his stuff. Guy's been around for a long time, and he's essentially a contrarian trader. So he likes to go against, in a sense, like I guess you can think of it in a sense of like contrarian trader. Like you're not necessarily trading with a trend to a degree, if that makes sense. So if you look at what he's been talking about, I'm actually like really interested to see how this plays out. But he's only been doing this for a long time. He's calling for a massive, massive crash at some point this year in the next, year or so. But he does expect to see right now a further correction in the short term before the melt up gets underway. So I'm curious, like, if this is going to be fun to watch to see how it plays out, because people have, looking through his past, he does have some situations, or a decent amount, where he's been right very, almost to the, the dollar or to the key level. So he says S&P to 44 to 4,500, Dow to 34 to 35,000, and NASDAQ to 14 to 14.5. Let's just see where we are in the NASDAQ. So NASDAQ, we're in that range. So NASDAQ has now dropped under 14.5. So 14,000 on the NASDAQ would put you down roughly to the lows that we saw in October. So kind of like, a little bit further downside is what he sees on the NASDAQ. S&P, we would be looking at, it looks like maybe a couple percent more, down max, like, 1 or 2% into that range. So we're pretty close on all those levels. And the Dow is sitting here at 352. He has 34 to 35,000 on the Dow. So just under that 350 on the Dow would kind of put you into that range. So a little bit further down to that 200 SMA or so. But essentially what he's been projecting, or he believes is going to happen, is a melt up that, essentially we've never seen before. So you guys thought that we had a crazy bull run over the past, year and a half, but it makes sense because when you see these crazy runs, when you see these crazy kind of bull runs, they tend to end, right? The end of the bull run tends to be a very parabolic period of time that no one almost sees the downside coming, because everyone's like, I guess here we go. We're going to keep going higher. And it just becomes like a crazy thing. So if we kind of pull it up, let's see if I can find it. Here it is. We're getting closer to my long-held forecast of a final melt-up leg into the secular top. Raising his targets, let's see, on the latest letter to, I guess what is his letter? I don't even know, but whatever. He has a newsletter or something like that. S&P to 6,000, NASDAQ to 20,000, and then Dow to 45,000, and Russell to 3, okay? This would be insane. Let's just look at that. NASDAQ to 20,000, guys. And you think that's going to happen this year, right? In maybe, second quarter, by the second quarter or something like that at some point this year. And maybe the timing is off, to some degree. But we'll see. NASDAQ, guys, at 14. So if you look at the math on that, NASDAQ goes from where we are even just right now to 20,000. That's a 38% move up in the next, within this year that he projects on the NASDAQ. That's insane. But again, if that did happen, I want to make sure everyone understands too. Like if we did see something like that, I don't know if it will. If we did see that happen, you better be, number one, take advantage, but taking your profits off the tail, because that to me is setting up for something crazy. Because when you have these crazy moves up, no one sees the backside coming, and the backside could be coming, and it could be coming, sharp, and it could be nasty. So I'm curious to see how this plays out, and if these levels hold up. But if he is correct, we're getting close to that short-term kind of bottom on this pullback. So we'll see. All right, let's see. AADI. Let's pull this up. AADI. AADI, interesting. That's kind of down towards the lower end of the range, right? It's a bioscience play, biotech. These have been getting crushed. By the way, XBI, biotechs have been getting destroyed. Look at this. I just saw one as well today. Hook. Hook is insane. We'll go over that chart in a second here. AADI is down at the bottom of the range roughly. We kind of broke below the lows from last week. So you got some support here down towards like 19 bucks. It could come down more. I don't know much about them, but not perfect. But here's your rough downtrend. Yeah, there are some wicks and there's some noise in the chart, but your rough downtrend is like this. So our downtrend will be a bit breaking back up over 25 bucks and holding is your downtrend break on AADI. But biotechs in general, XBI today, let's see what it's at. XBIT. No, XBI is the ETF. It's barely up. It's probably going to go red if it hasn't already done so, or it hasn't done so. But it is at the bottom of the range. So if you were looking at possibly looking at calls here on XBI into the end of the day, this could be a spot to pick something up for a quick little bounce back up over 95 into the close, if the close is strong, which I'm not sure if we're going to get, but we may. We got about another hour left to the close. But XBI is down to look where XBI is at. Look at this thing. Insane. Absolutely insane. We can probably get rid of this just because I was just using that to identify a level. XBI, there's a gap down here towards about an 87. That would be nuts if we get down to that level, but this has been getting destroyed. One of the craziest this is the biotech ETF, by the way. One of the craziest biotech plays or pharma plays, whatever you want to call it, is Hook. Look at this stock. Hook is down. That's probably one of the most insane sell-offs I've seen. Now, there was some news or something happened back in July or June that went from 20 down to about 10, so it cut in half. But ever since it got cut in half down to 10, right, this thing is down from just that point. It's trended down 80% from there, okay? Some volume, you can see some volume is picking up, though, as we speak, which is kind of getting me a little interested. Let's just take a look if we can find anything on Hook on FinViz. That's could be interesting. Let's see. Price of sales is 2.9, $57 million market cap, which is down substantially from where it was. It was probably, well into the hundreds, a couple months back. Downgraded price target by Morgan Stanley on November 12th. That was at $6 target back in November. And that was, okay, I guess November was back in here. So that was the little pullback on the 12th, I guess, right there. And then, the stock has gone off since. Any news as of late? Announces first patient enrolled in phase 2 trial. So they've actually had some news. It just shows, though, the market we've been in. It doesn't matter, right? This stock has had news along the way, and you haven't even gotten a little spike. There's been no little spike to pop it up and maybe kind of mercy or give people an exit. It's literally been no, there's no exit. You're not getting an exit. This thing is just going down. And now it's at $2. It's pretty interesting. Let's see if there's any insider buying. No, there is not. We've had only insider sells and last level of 249. Okay, whatever. So nothing super, super interesting there other than just this thing is down so much over the past 6 months that it's this is, if we do get a reversal on some biotechs, this is an interesting one to look at. We will see. SPY at 454, 440. Yeah, hey, that's not, I don't think it's that bold of a move down on SPY because realistically, right, percentage-wise, in terms of that prediction, right, if we get into that range, right, that's about a 1.5%. That could happen tomorrow, or that could even happen, tonight into tomorrow, right? We can gap down that much. So it's not, I don't think it's that outrageous. Even a 2% move down puts you right into that range. So it looks like to me, these ranges are kind of lining up pretty close to the 200 SMA. So we're, S&P, we're nowhere near it, but we're getting closer to the 200 SMA. And then the NASDAQ, we hit it. And then the Dow is right at it. Dow is just above it. So it's kind of lining up with the 200 SMA on a lot of the indices. So we'll see if that ends up playing out. I'm very intrigued to see if it does play out in terms of that guy's predictions. But because he's been doing it for a long time, so you can't knock it. But he is also predicting in terms of the backside of that parabolic melt up, right? His backside prediction is probably one of the most insane things that it's something that you can't predict. He thinks it's going to be a global massive crash, right? Now, for who knows how long, right? But something you can't predict, same as the pandemic. Could we have predicted that was going to happen? No, I don't think it was very realistic to think that we could have predicted that. But we'll see what happens. Again, if we do see anything like that, I will just make sure to caution people, to not fight into the FOMO and not fight into all that stuff. Play things as we see them. And then if stuff starts getting up to crazy levels, like if the S&P is at one point up 20%, 25% this year, I mean, I'd be very, very cautious. I'd be starting to make sure that I'm hedging myself. I'm always going to have a hedge on if I'm long on, anything more than a few positions. And then, I'll be hoping for the back. I'll be making sure I'm ready for the backside. Anything that I think is overvalued, I'm taking profits. If I'm up big on some positions, taking profits. I don't have to sell everything, but just, trimming myself along the way. And that's really it. It's the idea. Let's see. AYRO. This thing is being destroyed too. They're trading well below cash, right? They're down to 130s. Just been getting the same thing. It looks very similar to that hook chart. Looks very similar to a lot of small cap charts. This looks very similar to VISL as well. When this does turn, when this tide turns, right? Look at the spikes this stock has had even back in 2019. You go back to 2019. There was some crazy runs on AYRO pre-pandemic. The thing went from like $3 to $8. So it's not like this thing is like, I would say it's not like if you would look at this chart and think to yourself, this company is like going bankrupt, but like a lot of these stocks, they're not. Hit a new low today though. I mean, it's just been the market. IMTE, I still have. I'm going to be adding into this one. I want to do it up into the teens. So I'm looking up to this level right here. 13, kind of 30 is my like risk in a sense. So if we hold above 13.30, $13, I'm out. But I'm going to double roughly, maybe add like another 50% of my position up into like this range. I want to get it, over, if tomorrow we get a squeeze out, it halted up today, pulled back. It's super volatile. So look what this thing is doing. It's starting to kind of, you can start to see that we're potentially getting to a crackdown of some sorts, because this was kind of just trending, just solid trending for a while. They could go, way higher and, I can stop out, whatever, but I'm going to risk like, $300 or something like that. And that's really it on the position. But it had, yesterday pushed up in pre-market, pulled back. I think they had a PR, just a fluffy PR that, on 95% of small caps, 99% of small caps right now wouldn't do anything, but for whatever reason, it kind of helped. So it popped it up and then it dumped. So again, the range has been wild here, right? From that pre-market pop, 1025 down 22% intraday, down below 8. I could have taken it off today and locked in, like $10, but I was like, I'm not playing it for $10. I'm swinging it. Because hard to bar rates are only 42%. So for me, that's not bad. I'm fine swinging that for about a week or two. Over that span, it's just not worth holding. So ideally, I'm looking for the downside to come in the next 2 weeks. And then today I had to move up to here, halted up 11.20, and then it pulled back down to $9 roughly. So down another 20%. It's having those 20%, ups and downs. So I would expect something similar tomorrow, although it did drop, I believe, at one point today down 10%. Did it? Yeah, I think it closed up here yesterday. So it did drop over 10% today. So it technically is under short sale restriction. So maybe tomorrow is your final squeeze out day where the thing has a pops up into the mid-teens, and then I would be adding that. And then if it holds over 13, I'm out. But if it doesn't and it comes back down, I should be fine. So that's at least the plan for that. Doesn't mean that, it's a good idea, but that's what I'm doing. Want to at least have a short on to some degree. Okay, here's Lucid. Let's see what Lucid's doing. That's the puts. This is not Lucid. This is Lucid right here. Okay, Lucid's falling off into the close. I have that put that I'm holding tomorrow. I was messing around. I had played 2 more today into the highs. I essentially bought another put into the highs, sold it at VWAP, made a few bucks, 25% each time. On top of, I was holding one put ideally that I was holding yesterday that I was planning on holding anyway through the lockup expiration, which is happening, I guess, technically now tomorrow or tonight into tomorrow. It expires, so you can sell tomorrow if you're a founder. They just had some news, though. I believe that someone said that they were not going to sell their shares, so didn't really do much after that news. It kind of actually fell off, but it's been kind of falling off of the market, even though it's up a lot. Market's kind of pulling a little bit right now, so it's definitely a higher beta. Like it's moving more than the market, but if the market stays weak the next day or two, that will definitely help the puts on Lucid. Although I was saying, don't be surprised if this thing kind of holds up and keeps going. I wouldn't be surprised because I think everyone is under the impression that, hey, the lockup's going to end, insiders are going to dump shares. I wouldn't be just so quick to assume that they're going to dump shares. There's no guarantees, so just be careful there. All right, let's look at our Jets ETF. 21, just doing its thing. It's just chilling. I really think that when we get that next kind of bounce, or at least the next, not even bounce, the next stabilization in the overall market is going to be solid for the airlines. Very, very solid. Because, I think you're seeing, I've been noticing, I was looking at some peaks and whatever in terms of virus cases and stuff. And some of the big name states and cities, they're already off the backside. They're on the backside of the peak, unless there's another surge, right? But they're on the backside. So we're going to probably start seeing that becoming, at least more painted in the media and whatnot of the backside in the coming weeks and months. We'll see. But that's the plan on those. So I think when the market firms up, I would like it to not, I honestly don't even care if the market just kind of trended down for like months. Like literally, if the market just went like this for the next like 3 months, I don't even care. And we went to like 435 on SPY, a $20 drop over like the course of 3 months, that would be fine. We just got a more stabilized kind of market, and we'd have a lot more trends to pick up on and whatnot. And so be a little bit more, I don't know, stable, if that makes sense. Some people love the volatility. It's good and bad in a sense. If you're holding long-term positions, it sucks because it's like every day, don't look at your portfolio value. But if you're trading actively, more actively, then yeah, it's fun. SoFi is up big. Yeah, SoFi is solid. SoFi, we literally hit 1202 or something yesterday, and then it bounced literally right at our line that we had drawn in the prior days, or at least yesterday. I think I literally drew this line in yesterday, and then it hit 1202, like 2 cents off the line. Now popped up. Pretty nice. DATS setting up. Let's take a look at DATS. DATS chat. Yeah, look at this. It's holding up. Yeah, look at that. So again, same thing, same setup. Look at this thing again, right? Look at it. Boom, right? It pops up, pulls back, but then guess what today? It didn't die. It didn't go right back to the lows. It held up, and now it held up roughly around $3, and it's setting up for a little secondary move here. I think $4 is not out of the question on DATS. I think $4 is a realistic level up towards that 50 SMA too. We'll see. I mean, you could maybe I could take a stab at this too if I wanted to, right? Played Neuro and DATS and just sell into the next pop is how I would do it. So I have Neuro. I'm looking for maybe a pop into the close, or if it holds up overnight tonight, I'll stay in as long as it keeps the trend or holds over the lows of today. I'll stay in. And then DATS is the same thing. As long as I would say DATS, if you can play it, as long as it holds over like $3 roughly, you can wick down below, but you want to see it building back over 3 and not, just getting killed under 3. Holds over 3. This is looking pretty good for a little move back up, at least I would think. Back up into that 325 to 350 range is not out of the question, and maybe more if it continues. Grill, look at this. Grill was one that I've been watching. Look at these. Some of these little bottom plays are popping up. Let's see if Grill has any news. Grill is a total bottom play. Let's see. They got any news today? Yeah, they did. Muscle Maker Pokemoto division grows Mississippi market. Two additional franchise agreements in Mississippi market. So this is good to kind of see that this type of stuff is cool because, these types of things haven't really been moving. I mean, I honestly liked Grill. Problem is it's a NASDAQ stock, right? Is it a NASDAQ? Yeah, so they got to get over $1. So, that's my only worry about them. But, in the next, I guess, I don't know if they've gotten issued at the NASDAQ's, I guess, compliance law or whatever. Let's look at the filings. Grill, did we see, let's see if I can see notice of effectiveness, correspondence in the SEC. I would probably want to look through some of those. Maybe they had one, but it's something that I'd be careful of. Looking at BBIG. Yeah, BBIG respected our levels pretty much perfectly. So BBIG, let's take a look at this. I had these lines all from the prior run, and then I was just kind of charting out things as it started to make some moves up. This has respected everything to a T. So I literally had every 50 cents. These are kind of my lines. I didn't draw these in today. These have been in for, you guys can go back to the yesterday's stream and then other videos. Whenever they've been here for a long time. So I had a level right here at 375 was our resistance, pulled back, hit that, pulled back. Then it broke through, held above that. So it held that resistance, now a support, boom, great. Next level I had was 450. That was its consolidation right here. Opened the next day above that level and held it. Held over 450 here on the 18th. Pushed up, hit 550. That was our next level. Then it pulled back, trending, building all day. Boom, strength. Into the after hours, we broke over that 550, hit 599, 1 cent shy of my $6 that I wanted, or that we were looking at as the next resistance after that, and it has gotten rejected since. So now you are below 450. You want to see it reclaim 450 and hold above. If it cannot, this is currently, being run by the sellers and the shorts right now. That's currently what it is. So until it can get above 450 and reclaim that and hold, it is being run by the shorts, or, sellers are in control. You could say it that way. So the way up was it was cool though, is to see the lines and stuff play out. And it's just playing off of psychology. You're playing off of just past history. That's literally what you're playing off of. So glad to see that one worked out kind of nice, I guess. I was looking at Mesa too, because Mesa was that airline play that I'm looking at, a small cap airline play. It has had a little dump the past 2 days. I mean, the market's been red, so I can't, knock it too hard there. But I think I have actually an order set to see if I can get in on more of those calls. But I started buying 6 calls, the $5 strike. I'm essentially tossing a couple $100 into this. A little more than that, like $500-600, whatever it is now, $700. I think it's actually like $750 or so that I've tossed in. I'm looking for a 100 to 200+% move is in the next 6 months is what I'm looking for. They expire in July, so that's what I'm looking for on those options. If the airline setup kind of goes the way I'm thinking, which is my at least projection for the airline. So we'll see on that. But that's what's going to be all. That's what's all about there. I do want to go back to this because I was curious as to what the market was doing in terms of like underlying stuff. Okay, so everything's red. Dow, NASDAQ, and S&P are all red. We are seeing that 56% of stocks are declining today. About 40% are advancing. Again, so even though you might think that okay, we're kind of choppy, we're kind of in between on the market, even though that's the case, look at this. 100 stocks hit new highs, whereas almost 1,000 have hit new lows. So it's a complete downside disparity. It's just oh my. It's just completely on the downside there. And this number continues to grow in terms of stocks below their 50 SMA. 71.2% of stocks are below the 50 SMA, and then 64% are below the 200 SMA. I expect when and if we bounce back relatively in the next couple of weeks, right? I would expect a lot more stocks to be looking and setting up above the 50 SMA. So this might go back to closer to 50-50. And then we might be still looking at a lot more stocks below the 200 because it's a lagging indicator. So we'll see how this plays out. But roughly, it's kind of my thought process there on that. So outside of that, in terms of today's let's take a look at biggest loser. CRDF, biggest loser today. Let's take a look at that. CRDF. What's going on here? Just there's an offering or something's gotten absolutely destroyed. I'm noticing PTPI is on that list. Let's see what PTPI is doing. PTPI is interesting because look at PTPI. Yeah, look at that. This is a really good one. So this one is a very similar stock to what we've been watching, right? Eventually, the fun is over. So really ever since November, this has been one of those pops and drops and then rips, and it's a recycled pump almost in a sense. Just kind of is one of those lower floats that just gets recycled a million times and pumped, whatever. And every time it dips, it kind of holds trend and it builds. And it looked like it was trying to hold the 50 SMA right here. And then finally, we have cracked down below yesterday and then down even 20% today. So it's cool because these are some really good plays that when these stocks, crack down below and drop below some of these key levels we've been watching, these trends or these key, areas that we've been holding, for example, the 50 SMA, when it cracked below the 50 SMA, very, very straightforward play here. Could have been to short this stock, right, at the breakdown below. So let's say you got in here at 260-ish. Your risk is if it gets up over the 50 SMA and holds, so that's up towards 275. If it gets over 275 and holds over, get out. So you're going to risk yourself about, 15 cents. And look at your downside now. The thing is down under 2. You could have played this thing and targeted down towards 250 first profit target, 225. And then today you got even below 2. You got even 2 and less. So you're down 30% from where it was. It's a really nice trade, just literally letting this thing, let it do its thing. And when it finally says, okay, it's time and it's not holding up anymore and it's dying out, and that's when you can take the short. So that one's setting up. I wouldn't be shorting it now because it could go lower, way lower. But I mean, it's coming back down into the range that it was, kind of where it bounced multiple times in the past. So it's like not really worth it here, but it was at the break below that 50 SMA. That was a good short. Mix in a like. Yeah, that is true. That does help a lot. So all we really ask is a like on the streams, the videos. That helps so much more than you guys really realize. Here's a look at this one. Here's Vect. It has been the most boring swing I have ever had, but it's up and it's not moving, so I can't sell it because I like this one on the downtrend. It bottomed, and look what it's doing. It's literally doing exactly kind of what we've been saying. Now, this has no volume compared to a lot of other, more popular stocks as of late, right? But Vect is a stock that has literally just held up in this range. Here's the range. It's in this range from down towards 470 up towards 525 or 515. Pretty tight range, but that's it. It's literally in between this range. That's all it's doing. And at some point, either we're going to get some news or it's going to finally squeeze out or whatever, and it's going to go, but it is just not moving. And the signal for this one, again, was the same thing, right? Volume was increasing, so it was on my radar. Then we had a really big volume spike day right here. No news at the time, I believe. Popped up, and it pulled back, and guess what? It pulled back, but it pulled back and made a higher low. Built higher lows, didn't drop down below $3 again, and that was kind of my risk, and I held it, and it went up from there. I think I added up, so I averaged up a tiny bit on one of these pullbacks or something like that, but roughly like a 350 to 375 average is where I had it, where I kind of originally got in. So I played it here, and I'm up. I took off half profits, but I still want to see the thing make a bigger move. But until it drops below like 450, I'm gonna stay in. 50 SMA here is at 430. I mean, I can play it to that. 440 is a 50 SMA. It's above my average, so that's kind of my trailing stop loss. If this thing falls under the 50 SMA, I'll be out. It's such low volume that it could happen, on a candle almost, which would be unfortunate, but there's no reason for me to get out of it, right? Did the like before you ask? That's what it's all about. Hit the like before you ask a question. Grill into the close looks pretty solid. Let's take a look. Let's pull it up. Here's the daily chart on Grill, right? Really nice. Hey, 50 cents. A lot of stocks too. Note that level, 50 cents, kind of a psychological level. So you hear $1, you hear $5 for a lot of penny stocks or whatever, or small caps. 50 cents is a key area to watch a support or resistance. When below, resistance. When above, support. And so Grill hit 51 and it held up and it bounced off of 51 and it went today. Had the news, right? The news helps, but look at that. And this is kind of weird because it kind of doesn't look like super consistent, supernatural. It's kind of, to me, this is looking like a little algorithm is kind of on this thing today. It looks something's like a little weird, right, in terms of that chart, but it's just, I guess, lower volume and kind of the setup too. NBRV, the one that I had to cut because I didn't like it compared to the rest, did drop below 50 cents, but see what's doing today? Right around that 50 cent level, it's got some buying, or got some volume at least, is coming back on in. So this thing has got a couple of these, 85,000, 80,000. Let's look back the past couple of days. Is this notable? It's nothing crazy, but we did see this thing go from 52 to 70 cents, and then it started falling back off. So I took something off there, and then it started to fall back off, and I got out of this thing because it was, I guess, a lesser conviction swing for me or stock for me. So with the current conditions in the market, I had to cut it because now at least my rules are, which I think I'll detail very, very in a future video very, very soon, are five small caps, 5 penny stock swings at a time. I'll swing other stuff or, holds, like right now I have the airline, plays out to next year and stuff like that. And I have other stuff and I have Penn that I have out to next year. And I'll have, a mix in, a short-term trade or two here or there. For example, like IMTE is like a 2-week swing time frame there. Neuro could be a 1 or 2 day. It could be, it could be out today. Like I'll mix some of those in, but the core of my swing trade strategy, right? Buying bottoms, only 5 at a time. That's max. So that's the new rules, I guess. EVFM, look at EVFM pushing up here. EVFM, look at this, same thing, same exact setup, just to a different degree, right? Had a spike, hit up to almost 60 cents, pulled back. Guess where it held up? Pulled back and it consolidated right here, which was just a little bit higher or roughly where it was kind of consolidating in the weeks past. And it held up over about 39, 38 cents or so. And then today, off the races up 25%. So that setup has been there. I'm telling you, that setup is continuing to be there. Mesa. Yeah, I have a bid at 105 on this thing, so I can get it. It'd be great. This is the Mesa swing on the airlines, I guess. So we'll see. I'm doing some due diligence tomorrow on Spirit. We got Spirit Airlines tomorrow. I have a decent position there, but I'm going to be doing some true due diligence. I've never flown Spirit until tomorrow. We'll see what happens. I up because it was a cheap flight, so I upgraded my seat to like the exit row for like an extra like $20 or whatever. I was like, okay, fine, I'll do it. Because I just want to at least I like preferably being able to pick my seat if I can. On some flights it's free or whatever, I guess. But I upgraded that. I could have upgraded from $50 to like the big seat in the front, almost like it's not first class, but it's kind of first class. But I wasn't gonna spend that much money, guys, on not a first class, but on an upgraded seat to that degree. I got like the 12th row, exit row. That's more leg room. It's good. But we'll see how it is. We'll see if I like it, and if I do, maybe I'll add some more Spirit, right? We'll see. I think I'm a little bit down on those calls, but I'm down like maybe 10-15% on those, but they are leaps, so they're going to fluctuate a lot, day to day. So we'll see how that plays out. Let's see Lucid. Let's see what Lucid's doing to the close, how the market's doing to the close. We have now 40 minutes to the close. Lucid is getting, I think Lucid is really setting up to get, if it gets rejected here at this 42, man, plus timing up with tomorrow, I think this could dump a good bit. So I'll look to take some profits on that last put that I have there tomorrow. Ideally, I'm holding it overnight. Over 42 and hold, I'm out. So if it gets above that level and holds, I'm out. So I'll at least salvage whatever value the put has at that point. Break of 5.4, move to 6 is inevitable. I don't personally have any skills. Let's see. But I mean, hey, the lower these things go, the more interesting they become. Skills is another one of those too. That's, I guess you can think of it as like almost like Robinhood in the sense that the chart looks very, very similar. Not the sectors obviously, but the chart looks very, very similar. And especially with the news yesterday from Microsoft buying Activision, it's just like, okay, that sector could get kind of hot. It could be. We haven't had continuous sector moves where we have like a big news event that all of a sudden ignites a sector. We just haven't had that. We haven't. So it hit a new low today, 544. It could go to 5, could go lower than 5. Let's look at some of the, I think Skills, if I'm not mistaken, had some insider buys. So Skills right now, PE is 2.76, price to sales ratio is 6.68. So it's a lot more in line with a lot better than where it was, right? Let's see. Let's see if I can find any. We had insider buys. Yeah, we had Chief Revenue Officer. So in November, the Chief Revenue and the Chief Executive Officer bought in the 11th. Oh my, that's insane. The thing from November 8th, the thing is down another 50+%. That's nuts. They bought in the 11s. Okay, now they may be holding for a long, long time. So who knows? The Chief Technology Officer exercise options. We have directors who bought in the 12s. They bought in the 12s, and then the CEO bought some more in the 8s, but he bought 50. He bought 54 shares. Really? Like, what is that? What's the point of that? Then we got an insider sell. So honestly, from those insider buys, I remember seeing that and saying, "Oh, well, that's pretty good." At the time, it shows that they have some confidence. But from those levels, the thing is down 50%. That's nuts. Like we're talking about getting bagged. Now, obviously, they could be in a completely different situation where they're looking to hold this thing for a long time, for years. They have no intentions to sell those shares if they're buying them now. So who cares, right? If you can invest in something today and make 100 or make 50% or 100% in 5 years, that's a pretty good return, right? If you're confident in your company and the growth and where the sector is going and all that stuff. So I think the CEO and whatnot and the insiders there are confident, or at least have a lot of they're putting their money where their mouth is to a degree. Insiders own about 5% of the company, a $2.29 billion market cap. Just want to see how their revenues and stuff comes in. Let's see how their numbers come in and how they grow over time. If they can keep up and if they can grow, right, then these prices might be seen as a gift, in some point in the future. But the market we are in right now, right, has just been a nasty bear market for a lot of these growth plays. There's probably I think that there probably is a solid strategy in a sense of finding a lot of these, of picking maybe 5 to 10 stocks like this. Maybe like a Robinhood you can toss in there, toss in like a Skills, toss in like, I don't know, maybe Palantir. Let's hear it. Yeah, this is down under 15 now. Tossing like a Palantir, tossing a bunch of these kind of growth plays that have been beaten down like a good bit, but that have promising growth stories over the next 5 to 10 years that you don't believe are necessarily going to be bankrupt or go away in the next 5 to 10 years. We can't predict exactly, what happens, but I would wonder how a portfolio would do of 5 to 10 of these types of stocks where you buy them today. You don't average down nothing. You just buy 100 shares or $100 each or whatever, 1,000, whatever you ever want to do, each of these stocks, and literally don't open that portfolio, or you could look at it, right? Or wait 5 years and see what happens, or just watch the progression of that portfolio over 5 years. It'd be cool to see. I mean, I would imagine you'd be up pretty big in 5 years, but who knows how the markets and all that stuff works out. If we get this crash that this guy, David Hunter, has been talking about, that we were talking about earlier, if we get the type of downside move that he thinks we can see, then I mean, you're probably going to be down big before you're up. So if we go back, I want to kind of see if he has it pulled up here, if I can, for those who are jumping in now. For those jumping in now, though, this is one of the guys who has been, calling this stuff fairly close, honestly, as of late. He's got a ton of experience, been doing this for a long time. But his predictions, right, in this melt up, he thinks that even right from where we are right now into this year, some point this year, the S&P will hit 6,000, NASDAQ 20,000, and then the Dow 45, the Russell 3,000. He thinks that we're going to get that type of move after this little pullback. So that's insane. But he is thinking that we're going to see a correction on the NASDAQ to roughly, we're right there on the NASDAQ. S&P, we're close in the Dow. I mean, the Dow is kind of close to those levels too. So we're honestly close to a lot of those projections. We'll see what happens though. But then I'm not sure if we can find the downside potential move. But he is saying that he does think that we're going to see on the second half of this year at some point could change a massive drawdown type of move in the overall markets and just the world in general. So we'll see a massive, I guess, something we haven't seen in over 80 years is essentially what he's calling for. So I'm going to watch that and see how it plays out. But if we do end up bouncing where he says we may bounce, right, in these ranges, which we actually are now into on the NASDAQ. I think we're still just on the north side of that on the S&P and then the NASDAQ on the Dow. We're just above the top end of these ranges. The NASDAQ has now made it into the range. If we do bounce, or those are the bottoms in the short term, then I would be very inclined to follow along with what he says, or at least think about what he says going forward. So we'll see. We will see. All right, look at this Neuro, a little popper into the close, a little breaking over rewap here. Let's get a little squeeze out on Neuro. That would be nice. We get a little move up to 6. I would take some profits. Let's see if we can get to $6. That would be sick. I would definitely be taking profits there. I don't care if it goes higher. All right, let's see. Let's see. CRSR running up today. Corsair Gaming, right? CRSR. Corsair Gaming. Another gaming play, right? I guess with the news yesterday, some of these are making some moves. Oh yeah, this one looks like it has a better bottom. CRSR, and it has some more volume today, notably. So look at this. This is a definite bottom right around the $20 range. I know a lot of people like this stock. Personally, let's take a look at the numbers. Let's go back to FinViz and let's look it up. CRSR and pull some up. Let's see. Price of sales is now under 1. That is pretty appealing. Pretty attractive to me. Market cap is under $2 billion now. We had sales last year, looks like $1.95 billion. Look at that. Cash per share, 0.77. So, okay, they got about what is that? 75 million in cash or something like that. That seems like a decent amount of money. Obviously, we'd want to look into how much they're spending and whatnot, but they got some downgrades last year. They got downgrades into the 20s and 30s and 40s, even though the stock is way, way higher than that. Let's see if I can pull up on TipRanks what I can get from them on price targets on CRSR, if that's even something that we can pull up. Okay, we don't want this. I just want to look up a stock, please. CRSR, Corsair Gaming. Okay. Strong buy, 34% upside is the analyst consensus, $34. 65% upside is the analyst consensus there. Pretty, okay, well, that's interesting. Lowest level target, though, is 29. So that's pretty, that's something to think about. Again, right, if we move from here this year and hit 29, right, that's a 45% return. That's a killer return in my eyes. If you got that in 1 year or less. So We'll see how that plays out. But I like that one too. That's bottoming nice. Oh, I'll take a look at this. My little NSPR is green today. I got 2 green. Oh, little vol there. Not really. I guess a couple hundred shares. This had a little volume on 23,000 shares, then just 13,000 shares popped through. I wonder what's going on here. I've just been, if I'm in a swing, if I notice something like this, obviously I'm going to just take a peek and see what's going on. Okay, at $3. I mean, this one I'm bagged. I'm honestly kind of bagged on it, but I refuse to sell it. And I'm not trying to be like, I'm not going to sit here and say like, this is the best strategy that everyone should have. I completely admit to the mistakes of my strategy over the past like 6 months, which is why I'm correcting that going forward. And I'll show a video out tomorrow or very, very soon, next couple of days. It's back to my 2019 strategy that was super, super great, worked super, super well. But going back into kind of cutting into what that is, essentially back in 2019, I had a strategy where I'd buy bottoms, right? I'm buying stocks at the bottoms already, but I'm doing a little bit of due diligence, right? Obviously they're going to have some cash. I got to like their pipeline. I got to like the CEO. I want to make sure the company is not just some trash, right? So I do that research. I like the stock company. Okay. It looks a decent risk reward in terms of that front. It's not going to go bankrupt on me. They're probably not going to do an offering. They could do an offering. Anyone could, but they're probably not going to based on my kind of calculations or whatever. And if I do all that stuff and it all works out and I like it, okay, I add a chunk. And then I think I added in like thirds at the time. Now I have a fifth strategy. I would buy some if we drop to like this, a level that I had predetermined. Either it's a prior support or it's a psychological level. So let's say it's a $2 stock and the all-time lows or the 52-week lows are like 140 or 175. Okay, I'm going to buy at that 175. I buy it too. I buy at 175, and then I would buy it like 150 as kind of like my next level. I buy 3 times, and then usually either we get caught in an offering, we wouldn't usually, but I was saying either we get caught into some positive news and we sell the positive news, or we sell the next spike, whether that's a pump, positive news, whatever, and we're out. Or either the company just doesn't start, things get quiet, they drop some news and nothing really happens, and it kind of gets quiet, and it's like, okay, something's going on here. Next earnings comes out, I'm not a big fan of it, and I get out. Something along those lines. Usually the downside isn't like crazy big unless you're caught in an offering. But even on some of those bottom plays, number one, the risk reward or the potential risk of an offering is so much lower on some of those bottom plays, because the stocks at the bottom, no one knows about it, no one cares, no one's paying attention. They're not going to drop an offering if they can't get even any shares, right? So if no one's going to buy the shares, there's no intention, right? Who cares? So that was a strategy that worked really, really good back then. Started the account with like $250, took that up into the couple thousand, relatively soon. And then we had the crash, the pandemic crash or whatever. And then honestly, if I go back to that period, my account didn't do bad. Maybe it was because the second after the crash hit, we had those, Corona plays and the virus plays that went nuts. And so some of those went crazy. I remember CODX. CODX is one of my first, I was like, wait, what the heck is this? I didn't realize what was going on. But you go back to CODX back in 2020. Yeah, I mean, CODX, I remember this thing. I was in here under $1 and the thing went to what did it go to? $20 in a couple of weeks. I mean, it's insane. So it did well. Obviously, then that shifted us into all of a sudden these penny stocks are going crazy, bringing more retail traders and all that stuff, and everything went nuts. Then the strategy there was more of like a nibble down. So you buy a chunk, you buy a position, and then on red days and on dips to recent supports, you'd buy more. And everything would kind of float higher. Things would kind of grind higher. You'd get news and stocks would run 100%. You'd get this and things would go up. So the strategy of averaging down in that way that I was doing prior to that wasn't working because I wasn't able to get a large position size. So I ended up finding myself spreading myself across 20 stocks at times, not all the time, but 10, 20 stocks, and then just playing small position sizes in each of them. And then when the overall market does well for small caps, yeah, the account does well. But now that's not the case. We're in a much different, choppier time. So you got to be a little more, I got to get back to my original strategy, which at the time I had no idea what I was doing realistically. I was fairly new to small caps at the time, but it worked really, really well. So that's kind of the background to the strategy that I now have been working on and honing in on. And now going forward, so new positions from here are going to be implemented. I'm going to be implementing that strategy. So that said, NSPR, we are sitting on this guy. I'm just going to take a peek over on Twitter and see if I can find any. Let's just pull it up and see if we can find anything. NSPR. Any attention, news, people talking pumpage? Let's see. Go to the latest info or at least latest tweets on NSPR. No, these are just like ads for like Discords and whatever. And no. So no, that's good. So when I don't see anyone talking about it and I see some volume, I mean, someone's buying somewhere, you know, whether that's someone trying to get in with a big size before some news, before a little run, before a little pump. I don't know, but someone's buying it. So ELYS too at a low. That thing is insane because ELYS, let's pull it up. Hit this one is high on my list. So okay, let's say let's say NSPR runs tomorrow, or let's say VECT runs tomorrow, or VECT hits my trailing stop loss or whatever. Let's say one of these stocks I'm out, right? And I have a window of cash to add into something else. I am almost certain I have a couple stocks that kind of pin against each other, and I want to look at them all before I do so. You know, one of these nights when I have time, I'll do it. But ELYS, I'm almost certain will be under heavy consideration. If not, I will be buying. If not, there's got to be something else I really, really like, because this thing is off a cliff. Now you may think to yourself, okay, like this, it's small caps getting killed. The CEO just took his salary and bonus in stock. There has been some good insider buying, and the insiders own like a decent chunk of this of the float. Let's pull it up. ELYS. 30%. They own 30% of the shares in terms of insiders. So, I mean, and they've had some really good positive news flow as of late. So let's see, any news recently? Management alignment. They adjusted some people in the management, whatever. Okay, whatever. Yeah, so nothing crazy in terms of the news, but they had some positive news moving into the U.S. and stuff. So I expect more there in the coming weeks and months. But again, this has been one, it's just getting absolutely decimated. We're talking about a $56 million market cap. Again, right, this is one of those situations where over this span, right? So from September to now, the company has been making strides to grow, right? And the stock has gone from 6 to the 2s. So it's down like, whatever that is, a ton. A ton is what it is. Down from there to here, down 60+%. I mean, it makes no sense to me. Did the company decline by 60% or whatever, fundamentally speaking? Not in my opinion. All right, so now here's the S&P pulling into new lows into the close. So again, stair step. Here's the trend. Here's just stair stepping down. I really think that tomorrow could be the day. Now I look at it. I thought today was going to be the day where we kind of gap down. It looked bad last night. Before I went to bed, futures did not look good. But if we gap down and all of a sudden we open up in the 450s tomorrow, like around 450 or even below, if we trade below that level, I would look to buy SPY calls, give myself 2 weeks of time probably, but I look at SPY calls and I'd be looking, roughly, let's see where we're at right now. If I was to go, I'm not going to buy them now, but I want one more kind of pull through, and then that's what I'd be looking at calls, because it's been kind of coming down pretty hard, pretty fast. And if you go to the put call ratio, here it is. The put call ratio. Today it's actually down, surprisingly, but it was getting elevated. It's usually when the put call ratio gets elevated, that's when a lot of people are going over to puts and are betting on the downside, and they're finally going, okay, we're going down, I'm going to make sure I capitalize, and then the market flips right back, and they're 2 steps behind, right? So let's see what the calls are looking like. I would obviously, if let's say we flush out tomorrow and have another big down day and we're trading below 450 on SPY, I would start, obviously I would give myself time to be able to average in if I need to, but I would look out to like early February. Let's see, where would we at? What's today, the 19th? Today's the 19th, so I would maybe go out to like the 9th of February. I don't know what day that exactly is, but whatever. Go out to like the 9th of February, and I'd be looking around like, they're expensive, but I would be looking around like, I don't know, let's see, like these 452s, even go out to like 460. Play something. You're playing something out of the money. It's a risky play, but to the same degree, I believe we're going to bounce, and I think 460 is very much in range of the bounce. So if we go back and broaden things out on all of these bounce backs, yes, the trend has been to bounce back strong and to bounce back and do it in like 2 days. I would make sure I want to give myself more than that time. But again, I thought we'd see further downside, and I was kind of worried that I would be kind of positioned earlier this week when I had those puts. Or yesterday, I was worried I'd be positioned where I'd be like, okay, I'm screwed because maybe like the market doesn't do anything the first day or two of the week, and then it pulls back on Thursday, Friday, and my puts expired on Wednesday. Luckily, it didn't. But I'm thinking if we get down here, let's say, right, 460s is a 2%, 3% pushback. It's not a bad target. I would maybe look at lottery plays to 460, and then I would look at something closer to the money. Or no, just play a spread. If it's too expensive, play a spread. I would look at like a 460, kind of like a lottery. So these right now they're like $5. If we flush out more tomorrow or this week or whatever, then these will probably go down. The longer this goes too, these will probably come down under $5, maybe even under $4. If you can get those under $4, it seems like a good lottery play in my opinion. And then I'd be looking at like the 455s or even like the 452s or something like that as like a more realistic position size. No, nothing crazy on the options because, of course, they could expire worthless. But, I would position for something like that. But if you want to go on the spread side and not have to risk as much money, go out to like, I don't know, let's look at some March spreads. Let's go to some of these verticals from March. If I was to play like the 455, this is actually like really appealing to me. Let's take a look at these. Let's pull these up in the order entry. Control, view, order book. No, not order book. I want to view the order entry. Command. There it is. Order entry. Okay, so now let's go to the graph. This is really interesting. So this is essentially a 453 by 454 spread. Call spread. I'm buying it. I'm buying the 453s, selling the 454s, and essentially if we end up over 454 by March 18th, these hit max profit of $350 if I bought 10 contracts. If I did one, let's do one contract, I make $35 and I'm risking 65. In this case, I like that type of play a lot better for a bounce back because it's going to be cheaper. You're going to cap your risk, and it's going to be very, very easy to see your capped risk. Okay, I know I'm risking this exact amount, and here's what I'm looking at, blah, 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 whatever, blah, 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 and done. Or I can bring these down, bring my strikes down into like the I can bring the strikes down to make less, but higher probability. Or I can bring the strikes up and go to like a 460 strike, right? Now I'm more like 50-50. So now if I go to like a 459 by 460 strike, I'll make 42 if it expires over 460 by March 18th, or if it expires under 459, I'll lose 58. So it's closer to even, in terms of like my risk reward. I'm risking the same as my reward. So I would be looking at something like that. I would even think to go, I want to say go heavy, but I'd be thinking about potentially going pretty heavy on those, or heavier than I would, than usual, on an option play. Just my 2 cents on that. So pretty decent pullback into the close. And look at this. We've done it. We have done it. VISL under $1. Bag holders unite. Look at this. Dropped under 9. We've dropped now under $1. Now I want a bigger flush into like 97, 95 would be where I want to buy. I'm going to buy 300 more shares is what I'm going to do. I have 2,700 rounded up to 3,000. And that's what my plan. But man, oh man, this has been just a pain in the butt to just watch over the past couple of months. This one hurts. This one definitely burns. I don't think it hurts anymore at this point. Nothing hurts at this point anymore. It just it's a slow burn. That's what it is. It really is. So we've finally done it, cracked $1, and I honestly, does it make any sense fundamentally? To me, no, but here we are. We had some positive news yesterday, and guess what? We're down. So, But again, if you just look back to the history of these types of stocks and look at what they tend to do, right? You go through periods of time, cycles, market cycles. These are the cycles. Everyone has their own strategy, and whatnot, and what they want to do. But these are the cycles where if you identify stocks that you like, obviously have your own plan and strategies. I know when I'm going to cut it, I'll cut it. If VISL drops an earnings report next and it sucks, I'll cut it. I don't care. I don't care. But they have had solid earnings as of late, so I'm not cutting it. I just fundamentally, that is part of the plan. I'm not going to cut it. Did I mismanage or add too early? Yes. That's why I adjusted my strategy going forward, so I have a better strategy of how I add into these things. But we finally cracked $1. I guess with the tears coming down my eyes, right? All right. Let's see how these stocks are finishing up the day. Let's see. I want to go to DATS. DAS we were talking about earlier. Let's see what DAS is up to. 298. So it's falling back under $3. It kind of got cracked down there. DAT's dropping back. Didn't look too good. It fell under a VWAP. I'm not a huge fan. Could this be a dip to snag? Maybe. I'm personally not a huge fan of that look. Kind of reminds me of Neuro yesterday, where Neuro looked decent, and then it kind of fell off into the after hour. So it looked good in the last few minutes of the day. It pulled back, and then it just kind of slowly died, which we're, by the way, still in it. Well, not still in. I just added back in. And we're kind of holding up, still building higher lows. If we drop under the 540, then no, we aren't, but we're still holding up on Neuro. Honestly, I'm kind of surprised that, look at NSPR. That's weird. The thing pops to 30. I guess someone was running it in. I don't know. The thing popped up. Well, there's no volume. It was up over 3, and then a 10 share order hits it back to 280. Okay. I'm surprised that VISL didn't drop more on the $1 crack. I was expecting, if it cracked 1, I was kind of expecting a drop to like 97, 93. I wouldn't be surprised, but it didn't. It's kind of just like there's just no volume. There's just no one there, and like at all. And there's like, at this point, I believe there's probably no one even that has a stop loss on this thing anymore, because they're like, what's the point if they're even in? So, all right, let's see what's Lucid up to these days, this hour. Oh, that's pretty nasty dump into the close on Lucid. Although these options aren't, they're slowly grinding. I do have on these Lucid options, though, the market's kind of red to the close too, which is kind of why. But on these puts, I technically, I'm out of the money. So it's at $40. I got a 39 put, so I got 2 days for this to drop well below 39 for me to break even on that, unless it drops to 39 tomorrow, and then the time and volatility factors will still be high enough to keep the price elevated. But that's kind of the idea. Should we sell everything we have since it'll never go up? I think that's what a lot of people are thinking, right? I think a lot of people are thinking that exact same way. So the way that I see it is that most likely, now it may not, what's going to happen is this. When you're in it, it's such a psychological thing. When you're in this, right, and it feels like it's never ending. It just feels like every day it just sucks. It gets worse and worse, right? Then you'll get out, okay? You'll be cleared up. You'll feel better. You drop your bags, right? And whatever, you get out. And you won't worry. Maybe you just go buy, SPY or whatever. You go, whatever, buy an index fund or buy ARK, or, ARK is, I guess, a little risky too. But you buy one of those, and then you think to yourself, okay, a couple of days go by, maybe a couple of weeks go by, but you're all of a sudden going to see you're going to go back. You're going to be curious. You're going to look back at those stocks, and you're going to say to yourself, let's just take a peek at where these stocks are at. And then all of a sudden you look, and maybe your bag that you held, and you dropped the stock at 1 and it went to 2 the next couple of weeks, or it went to 150, or it's at 125 now, and you're like, what the heck? I dumped that thing at 1, now it's at 125. I could have at least sold it at 125 and salvaged a few more dollars. This is how it goes. It's literally how it goes. And it's going to feels like just a million years when you're in it, and then you're going to look back. And maybe it takes a month or something for you to look back and finally check these stocks out again. Maybe it's a month later or whatever, but you're going to look back and think to yourself like, geez, man, I wish I just had a little more patience. And it happens. I'm telling you, it's happened to me many, many times in a lot of small caps. It happens in small caps especially. It's really kind of the name of the game. It's a patience game. But most people are too impatient to kind of hold for either a bigger move or to kind of hold through the downturns and hold through the red or take anything away from it. So the way that I see it is that there's time to adapt, which is why I've been playing more options. I've been just playing more options here and there, and I've gotten a lot more into it as of late because I see opportunities, and a lot of these stocks respect their technicals a lot better. So when the market's wild, I find that that's a great place to go and to take advantage of. And I'll also use them as hedges. So I hedged myself last Friday. If you guys were on the stream, you saw last Friday, we had IWM puts. No, I sold them. I wish I could have technically still had them, and they'd be worth a lot more, right? But I sold them. IWM looks nasty, man, down to 205. I sold them yesterday. So I had them. IWM was at 214 last week. Then yesterday, it hit 208. Now I sold them down around 210, 209, something like that. I don't know, whatever I did. But I still made money on the downside. So I just hedged myself. So there's a lot of ways to okay, if things suck, instead of sitting here and complain or cry, well, I can trim my positions, or I can manage them better. I can cut one and redistribute my cash, or make sure I hold more cash so I can add on my favorite ones if they do dip further. And I can hedge myself with a small cap put, right, on the IWM, on the small cap index. I can hedge myself with puts here. So that's exactly kind of one of the things that I want to do a better job, and I'm doing a better job of, at least so far to start this year, if not just letting it just happen, and at least take advantage of the downside. So take a look at this. This is IWC. This is the micro cap ETF. So I think a lot of us who play, penny stocks, you probably are correlating more to IWC than IWM. IWM, some of these small caps are actually like bigger name companies like Crocs, AMC are some of the higher weights in the IWM. IWC is like the micro cap, so a lot smaller market cap companies, a lot of your biotechs and whatnot. This has really kind of pulled back and drawn down big time on IWC. But again, how low can these things go? With further weakness in the overall market, these can go lower, right? They can always go lower, right? But if the market bounces back and all of a sudden the S&P regains its uptrend and pushes back up and goes to all-time highs in maybe February or March, let's just say, if that's what happens, I can't envision a world where I literally just can't, where IWC goes to like $100. If SPY is at its all-time highs, I just can't imagine this is still down here. It's just not. It's going to bounce. So looking at these charts, it's not technical analysis is great, and I love doing technical analysis, but I think it's much, much better for individual stocks and looking at the broader indices, but not necessarily looking at like IWC, IWM, looking at, let's say, S&P, NASDAQ, and Dow. I think those are more valuable for technicals because this is going to do what it's going to do, but it's going to kind of get amplified by the overall markets in a big way. So if the markets are weak or trading choppy or whatever, well, they're probably going to just sell off small caps. Markets are super strong and everyone gets back onto that risk-on approach. These are going to outperform the S&P. So it's like, it's a push and pull. It's difficult, I would say, to just think to yourself, because I think a lot of people are looking at this chart and saying to themselves, okay, well, here's our next little consolidation right in there. And then they're thinking to themselves, oh, here we go. We're coming down to here on IWM. In a perfect world, the technicals would work out and that would make sense. If we saw a bigger crash, maybe, yes. But that's a 25% pullback on IWC, and IWM, I would say, is very similar chart looking. I just don't envision that it could happen. I just don't envision that happening realistically if the markets go back to all-time highs. SPY back at its highs. SPY at all-time highs here in early or late December, early January. Okay, and then you go back to IWM. We're looking at IWC. This is IWM. IWM hit highs in November, but back in that point in late December, early January, IWM, look at this, was at 225. So, okay, $20, a little bit less than $20 off its all-time highs. I mean, it's right there. So just because, that's one thing that I think is worth making sure you're paying attention to. Don't just think that, okay, here we go. Russell is now at levels it hasn't seen since January of 2021, which is true, right? Here it comes. Here comes the down. Here comes the big down draw, and it's going to go down to these highs that we saw pre-pandemic. Right, from here to pre-pandemic highs, that would be a drawdown of 17%. It's not that much. It could happen over a long span of time, maybe. But if we get a bounce back in the market, it's probably not going to happen. It's not like this is going to just fall off a cliff and go down that low next week or next month. It's just probably not going to happen. Okay, S&P into the close, down 0.8, new lows. Look at this, new lows. Here we go again, right? This is what I'm kind of thinking is I think we're going to see. Let's see. I'm thinking that this is where you might want to start looking at building out a position on some calls out to, give yourself some time. Let's see if you look out to, let's go back to the vertical. Let's go back to single option, puts and calls. If you were to go out to like, what is this, the end of next week, mid next week or end of next week? These are fairly, these 454s, 452s could be kind of cheap. If we bounce back, $5 on SPY, these could double pretty easily. So I kind of like I'm thinking about doing that. That's my thought process for tomorrow. Honestly, maybe with this pullback into the close, I kind of like maybe starting in on something like that now for a snapback bounce. I mean, that's something I kind of like. making sure you're thinking a little bit ahead of where we're going. So yes, does this look bad? Could we drop down way more? Yes. But that's exactly what we thought. Almost every other bottom, we felt the exact same way. Could we go down lower? Yeah. Oh, here we go. It's looking pretty bad. And then we bounced, right? Now, does it mean we're going to bounce back to all-time highs? No. But if we bounce from where we are right now on SPY, you bounce back to 455, 456. Any of these options that you snag, let's say you go out to like the 24th or something like that. If you snag like a 452 or a 455 for less than $3, that can go to $5 just like that. Boom. You know, if SPY bounces back to 455, that's at $5, right? If we see a bounce back tomorrow or something like that. So I don't know. I mean, I'm curious to see what happens overnight if we get that panic, futures looking pretty nasty type of stuff, or if we're setting up and, we kind of, are trading flat futures wise. We trade flat and then, all of a sudden we kind of bounce back when the market opens. We'll see. All the ones I'm investing in gives a dividend every month, so it'll be worth. Yeah, well, if you have dividend stocks that are down, hey, you're collecting a dividend, and you're getting almost paid to make it through the pain. So I mean, in a sense, right? It's not the end of the world. Let's see. I want to go back to Neuro, see how this chart is looking before the market closes. I'm not a huge fan of holding this one overnight. I don't, because there's a risk of the offering, so I'm not a huge fan. So maybe I'm just going to take this one into the close. I'll give it a second or two, and if I lose, $5 on it, I lose $5. But I'll watch this one very, very closely into the close on Neuro. So I'm paying attention to that. I'm looking at my pen. Is pen up? Is pen up? There's no way. Wow, pen is up 1% today. Look at that. Little relative strength in a weak market. While everything's down, pen is up. I'm surprised. Now it's down, it's been beaten down, so don't get me wrong. You broaden the chart out, it doesn't look good. But something to think about there. And they had some good volume into the close yesterday, so I don't know. Something might be going on here in pen. I have calls out to 2023, so if pen makes a run, hey, I'm there. Let's see. Let's check where Apple's at. You know what? Apple has been interesting because, wow, look at this. Wow. We're coming down to our trend, our top of our trend. I would expect we're going to break that to the downside unless the market bounces really, really strong right here. We'll see. But right in here could be your next bounce point for Apple, like 165-ish or so is kind of nice. Look at these SPYs now. Look at SPY. I might grab some calls and just snag a little something here into the close or start building out something for next week. Let's snag these, honestly. I'm going to snag these right here. These 454s. I'm just going to buy one because I want to give myself plenty of time on these. But what they're trading right now at 309, I'm going to snag them. Buy one of these. Oh, insufficient options buying power. What are my options buying power at these days? I guess I got to trim something off. Oh, yeah, I got this Neuro. Let's get rid of Neuro, and I'll buy those. Sell 150. Let's just take those off at break even. Didn't really work out the way I kind of thought, so okay, cool, whatever. Sell those, and we're out. Now let's go to SPY and start looking at that. Look at this. Look at this dump into the close. I think that's really, really, really appealing. So I'm going to snag these. Buy one of these. I have a short on, which is probably why the buying power is looking pretty thin. Okay, we're in on those. I got filled at 309. So I got filled at 309 for a 454 call for next week. Starting to build a position there for a bounce, possible bounce play. And that's my starter, I guess you can think of it that way. But these can double. I mean, if this doubles, right, I'm good with that. It goes to $5. I'll take some profits in that, Ideally in a perfect world, I kind of want to wake up tomorrow, see the market down big, and then add one more of those calls or something like that and go long on some stuff and then watch some bounce backs. It's kind of ideally what I would like to see. Lucid, again, with the market looking this nasty and Lucid going into the close. Let's pull up Lucid into the close. How's it looking? It's at $40. It's trying to hold and defend $40. We'll see if if we get those sellers overnight and it gaps down. But on a gap down, I'll be out of that put tomorrow on Loose. Good old Lucid Motors. Let's see. Okay, market's down 1%. Everything's roughly down in line. So the Nasdaq's down 1.14. Dow is down just under 1, and SPY is down, S&P is down just about 1. So it's pretty much, it's honestly in line to pretty much everything's fairly even. It's not like, oh my, the Dow is up and then the Nasdaq's down red huge. Like we saw that I think last week once or twice, but no, it's not really showing us that. We're kind of getting, not the opposite, but we're kind of getting everything kind of pulling in the same direction at the same time. But I mean, I like that. I really like that idea. I really like the SPY idea because you're playing the opposite of where everyone's going right now. Everyone's panicking into the close and everyone's freaking out, and you're kind of playing the exact opposite of that. If we do, I'm not saying we are going to bounce tomorrow, but if we do bounce tomorrow, those will be nice, and we'll see how it goes from there. The Jets ETF finally breaking back below there. I kind of want to see, as long as it holds over 21, it's still building up. EVFM, this kind of ruined a lot of stuff. That the market dumping like this into the close kind of ruined a lot of momentum-based stuff. So EVFM was showing good signs. It's starting to fail right here. Grill's kind of holding up. SBEV getting crushed into the close. Vine, look at Vine. It was building nice. VVOS tried to kind of build back up. This could be one to watch tomorrow. I think VVOS is one to have on your radar for tomorrow, in case this thing kind of firms up and bounces and goes crazy, right? Alrighty. So that said, NSPR, something's going on here. Something's going on. Some volume. I guess there's just the spread's huge is why. Maybe, I don't know. But there's some volume coming in. We had 23,000 shares, 13,000, and then we had a little 3,000. So someone maybe snagged some of that. Maybe there's something coming for this one tomorrow. We'll see. They just had a presentation, which I thought went pretty nice, but we'll see how that goes. Okay, finishing the day. Let's take a look at what the overall everything looks like. Here we go. Back to FinViz. Back to home. So we saw today 61% of stocks declining, 34 advancing. So decently, skewed to the downside there, but a pretty decent strength relative, being the market down 1% across the board. Almost 1,000 stocks new lows, 90% hitting new lows compared to less than 10% hitting new highs. 100 stocks hitting new highs. Way down in terms of stocks below the 50 SMA. Almost 72% of stocks under the 50 SMA, which is seen as a pretty good momentum indicator for strength. Above that level, you're very strong. And below that level, not so much in the short term. And then 200 SMA on a broader term over the past, let's say six months or so, year roughly, do you have momentum relative or not? And most stocks don't across the overall market, even though the indices would show you that, hey, we're above the 50S or we're above the 200 SMA on the Dow and the S&P. The NASDAQ is not. Let's go back to look at that really quick. By the way, those SPY calls that I snagged at 309, they're already, they're even. They're even as we close. All right, let's go back to this. So here's the S&P, dump into the close. Good. It looks, we're getting closer to that range. S&P is, roughly, I would say, about $10 off its 200 SMA, so that's pretty far off. The Dow is pretty much at that last pullback to the end of the day. The Dow is right there. The Dow is pretty much right at its 200 SMA, just above by about $1. The NASDAQ, on the other hand, is decently below. It's about, 2 candles now below. Roughly, it's about, I'll tell you, 2.5% below the 200 SMA. NASDAQ is coming into a zone that was a very nice bounce zone back in October and back in July. So we're getting very, very close. I suspect potentially tomorrow could very well be a day where we open up, gap down, we open up lower than where we closed today. So there's a gap right on the daily chart, and then we rebound, right? Depending upon how big the gap is down will depend on how bullish I'd be. If it's a huge gap down, I would be very inclined to pick up some calls or just to buy some shares. That's in my eyes, that would be a very good situation. If we open roughly flat or even, then maybe we kind of just chop along, and who knows, we'll see what happens tomorrow. Maybe a flush, and then that gets bought up next week. We'll see. That's kind of my speculation. But that said, I'm going to change this over to the after hours screener and scanner. That said, not much, at least from what I can tell, is moving. AYTU. Let's see what's going on here. AYTU. No, that's not really volume. There hasn't been a lot of stuff that has been making moves in the after hours, really, and pre-market hours a little bit, but nothing crazy. Nothing crazy. Let's just take up BBIG was yesterday's after hours mover. It did come up and got up to that 450, so It's kind of right at resistance. We'll see how this handles the next couple of days. But it seems like shorts were in control there today for sure on BBIG. But that said, I am going to wrap things up here. I thank everyone for tuning in. I will not be around. I'm flying tomorrow. I'm doing some due diligence tomorrow on Spirit Airlines. So we'll see how Spirit is. We upgraded. I bought a exit row seat, so who knows? We'll see how that is. But I have a decent position on Spirit Airlines calls for 2023, so that's why it's doing some due diligence, and we'll see how it is. First time ever flying Spirit, but I'm doing that. I got to leave, got to go up to New York for the weekend and stuff, and then I'll be back by the Sunday. So we'll do a Sunday stream. I'm not sure if I'll be able to post a video on Saturday on the portfolio update, but if I don't post one on Saturday on the portfolio update, because I'll be away and I'll ultimately be pretty busy. We'll see. If I can't, then I'll build that into Sunday's video. So like Sunday's live, we'll do a portfolio update, essentially like the trading stocks to $100,000 video, and then we'll go into the live like we usually do. That's the plan. So thanks so much for watching. Any thumbs up, I really appreciate that. It helps out with the stream so much, helps out the channel a lot. Thanks so much for watching, guys, and we'll see you in the next one. Stay tuned for tomorrow. We have videos. The rest of this week,